Are you tired of overly complex strategies that require complex mathematical formulas, paid data, and full automation just to test? Well, what if I told you that one of the cleanest, easiest to run strategies you'll ever see uses only two ETFs, TQQQ and SPY, and you don't need anything fancy to run it? No paid data, no automation, just logic, simplicity, and powerful results. So today, I'm going to show you a mean reversion strategy, TQQQ, and how pairing it with a SPY buy and hold approach can improve your results, even if you're managing this manually. Let's start with the basics. TQQQ is a 3 times leveraged ETF that tracks the NASDAQ 100. That means it amplifies both gains and losses. Great for short-term strategies, but definitely not ideal for long-term holding due to volatility decay. So how do we handle that? By building a mean reversion model, we aim to buy TQQQ during short-term pullbacks and sell it into strength. Mean reversion works because markets often overreact, especially in volatile assets. When the price stretches too far from its recent average, emotion drives the move. That's where we step in, buying the fear and selling the snapback. So when TQQQ has fallen a few days in a row, then we buy. And we sell once TQQQ has made a short bounce up. And you might wonder, why are we only testing from 2010? The reason is simple. TQQQ didn't exist before that. So we start from the earliest available data on Yahoo Finance. But here's the issue. TQQQ alone, even with a good entry and exit, can be extremely volatile. In our tests, using 100% portfolio exposure just for this strategy was too aggressive. So we needed balance. That's where SPY comes in. We pair our short-term TQQQ strategy with a long-only SPY allocation. This smooths the curve, reduces drawdowns, and adds market exposure for long-term growth. We even went a step further. When SPY is above its 200-day simple moving average, we reduce the TQQQ allocation a bit. Why? Because mean reversion tends to perform better when markets are volatile or in a downtrend. When fear spikes and prices drop fast, sharp rebounds become more common, and that's exactly when mean reversion shines. So here's how the allocation looks in our Realtest script. If SPY is strong, above 200 SMA, we allocate 40% to TQQQ. If SPY is weak, below 200 SMA, we bump that to 50%. SPY gets a consistent 60% allocation, but you can modify it as you want. This creates a really interesting balance between risk-taking and safety. When we combine these two strategies, TQQ, mean reversion, and SPY buy and hold, the equity curve looks really clean. Drawdowns are shorter and less painful than SPY alone. Recoveries are faster and more controlled. You can download the full rules and Realtest code for this strategy. Link in the description. And remember, you can manage this strategy entirely manually. No automation needed. But this is not financial advice. We're just testing ideas, sharing research, and showing what we find through historical data using Realtest. Always do your own research. And people don't fail because strategies don't work. They fail because they can't follow them consistently. That's why every strategy we build at SetupAlpha is designed to be simple, repeatable, and emotionally manageable, so you can actually stick with it and see results. And this TQQQ plus SPI setup, it's just one of many. If you want even more strategies like this, built with clear logic and smart psychological edge, check out our full collection. Whether you're into mean reversion, ETF rotation, or fully diversified systems, or even short-selling stock strategy, we've already done the hard work for you. Our strategies are built only from academic research papers or our own in-house deep research. So what did we learn today? TQQ works beautifully with mean reversion. SPY provides long-term balance. Simple allocation rules reduce risk, and you don't need paid data or automation to make it work. And feel free to download the full rules and Realtest code for this strategy. Link in the description. If this helped, drop your thoughts in the comments, or tell us what you want tested next. We might just build it out in the next video. And if you're ready for smarter, simpler strategies backed by real data, check out our full strategy library.